Actually, Sourceman here. It's September 21st, 2022. An interesting day today. Well, from a volatility perspective at least. Nothing really changed at all. If you're a value investor, especially if you're a long-term value investor, because it doesn't really matter what the markets do on any given day. The value of the companies don't really change unless there is news out anyway. But we had a hike in rates from the Fed, and the markets immediately responded with going down. Then they went back up, and then they crashed. It's like, again, why on earth would I want to be a trader? Gold started down, like the markets, then went way up, and then some of the gains were given back. Silver, I think, was up like 4% or something. And interestingly, earlier in the day, when markets were already down, dollar was up a lot. Actually, the dollar ended up over 1%. I think this is the highest level in many years, actually. And yields were up. They went down later in the day, but still gold was flat. I mean, this is what I mean, when I read the stuff about it's going to crash to $1,400. First of all, the juniors are pretty much already pricing that in, so it's like I'm pretty much not even overpaying if that were to happen today. And there are absolutely no guarantees that will happen. Because, if this was, 2-3 months ago, if we saw dollar ripping almost 1%, stocks tanking, and yields rising, I would have expected gold to be down like 3%, something like that, and silver to be down 4-5%. And today, they actually closed up. So it's like you have really no idea. It just looks again like sentiment is so flushed out. The positioning in the COT, the COT report is suggestive of bottoming conditions. Everybody's already short gold and silver. Everybody's already sold. So it appears there's not, even on a day like this, there's really no one that is left that's thinks about selling. That's how it looks. So I don't know where you would get the fuel to have gold and silver, gold go down to 1,400. That's just my view. I'm not a market timer. I'm not a trader either. I'm a value investor. So it's like I have no idea where gold is going in the short term or medium term. Same for silver. I just know that the things I'm mostly invested in, which are the mining stocks, they're like obnoxiously cheap already. So it's like there's no mystery there. I don't need to guess where gold and silver is going in the short term. I just look what am I paying for everything I'm buying, and how much do I get? What am I paying for it? It's like no-brainer buys all across the sector. It's like cheapest ever, way cheaper, way better risk reward in 2015-16 bottom, because then gold was at $1,100 and the gold business was going. Everybody were going towards bankruptcy. That's not the case today. There's a bunch of juniors out there like $8 to $40 million in the treasury, etc. And the gold projects themselves, they have pretty robust NPVs and IRRs at today's prices. Sure, inflation has gone up, etc. But at least, which I think I've talked about recently, maybe last podcast. Now I had a 1 hour call with a friend. He's kind of a mining investor due to myself. But he's not really a stock pick or anything like that. But I did a rant for like an hour about just how absurdly cheap this sector is. That I'm at max greed. I've been at max greed for some time, but the greed levels are just going higher and higher, because it is totally surreal how much I get for my money in this sector. It's like you can buy meals for free. Imagine if you have that had that purchasing power. It's like, yeah, you want this, meal for $200 million for free? Yeah, I'll take that. Is it worthless? No. And it costs $200 million to rebuild. It's like, just look at I started on a post, still in draft mode. But it's like, I just found it curious, like, because obviously the thing is, in my opinion, which I said in the last video, and which I ranted about to my friend, that the lower end later you sell, the worse it is. If a downtrend has gone on for 2 years, and it continues for 3 years, and is at the same level, it's worse to sell 3 years in than 2 years in. Because any additional year, for example, is 1 year closer to the next uptrend. That is by definition, because no trend lasts forever. So it automatically becomes worse to sell the longer a downtrend has continued. Furthermore, the lower prices are, the higher the larger the price to value gap is, it also becomes worse, because your future expected returns are going exponential. So selling late and cheap and cheaper is absolutely the worst thing an investor could ever do. That is the costliest thing you can ever do. Because what is a bottom? First of all, you don't know when a bottom is in, but what is a bottom? That is the last day of a downtrend. When the price is the cheapest it will be before the next downtrend, and closest to the uptrend. Because that's literally the day of the bottom. So that means the returns from said bottom day are the highest, because the price is at the low. And you are exactly at the point where a new uptrend has begun. So the positive returns are immediate. They are starting right there and right there and right then. So how do we know we're closer to a bottom? Obviously, if at time X, if we fast forward 1 day, time X plus 1, we're 1 day closer to the bottom, by definition. If price goes down as well, the future returns go up. So selling from here on out, and that's been going on, from the top of the mining sector in 2020, selling becomes worse and worse by definition. Of course, if they started out at overvalued valuations, they were not even good buys to begin with, so they were actually sells. But now we're at such extreme levels, and every additional down day, by definition, gets us one closer to the actual bottom. And any additional downtick makes the future returns go up. So you will have quicker and larger returns if you buy tomorrow, if tomorrow is a down day, than you would have if you bought today. Which means that selling also then becomes worse and worse, by definition. This is really common sense when you think about it. And furthermore, okay, how do you stick to your guns? It's so obvious that it is cheap, and everybody knows. Look at any chart that has gone up for years or whatever. It's like anybody could point to where they would want to buy, the lowest possible point, right? So as we go lower, it's even though we know that cheaper is better, it feels worse. It's hard to do. But it's like, if you had not known about this sector, if you had not looked at a single chart, if you did not look at a single chart, you had no reference in terms of pain from being in this sector. You had no idea about how bad the charts looked, how negative the trend has been up to this point. And you just looked at what you're getting for your money. What is the price to what I'm paying? If somebody just showed you a presentation or a company presentation, and they basically describe everything of value that you're getting with this company, and then at the end they showed how much are you paying for all of this you get. There is not a single person on earth who would not be buying right now. Any rational person would be buying right now from a value investing standpoint. So it's like, to make an example, to have a few examples here to just prove my point. Let's look at Bonterra Resources. It's a Canadian junior, has had a lot of, let's say, troubles. Troubles. I haven't really followed the story, actually. I just know that, like I said last video, they have a new CEO, and he's from West Dome and St. Andrews Goldfield, so he's, he appears to be legit. Last I checked, the market cap was 74.5 million Canadian. Latest presentation shows them with 8 million in cash. That's an enterprise value of 66.5 million. They have 3 million ounces on the books. So if we assume that the discovery cost of an ounce of gold is $44, I think one of the Lundin Group CEOs said it was around $44. Obviously, that's like a global average, and it, some deposits might have 15, some might have, $70, etc. But that's just for simplicity's sake, say 44. So you're paying for all progress and all infrastructure and yada yada. You're paying 66.5 million for everything the company has done up until this point, every success, every value created. Going by this metric, $44 per ounce, it would cost 132 million to drill up 3 million ounces. So you're buying something that would cost 132 million to redo for 66.5 million today, without even having to wait the years it would take to drill up 3 million ounces, and not even taking the risks, because there's no guarantee they will even drill up 3 million ounces in the first place. Then they also have sunk costs in the form of a mill, assay lab, 3 camps at their Bachelor, Barry, and Gladiator projects. What's that worth? I would guess at least 100 million. I don't know, it's relatively small mill. 100 million, I think that is fair to say. And don't forget, right now, with an inflation going at, 10%, sunk costs, all of this would go up in sunk costs, like, let's say next year. It would cost 110 million to rebuild that. So they could just basically sit on their hands, and if inflation went up like it is doing right now, next year they would have something that is worth 110 million if they were to rebuild everything. So that's the beauty of if you find juniors with sunk costs, for example, because it's costing more and more to get the progress they already have. Sunk cost in time, again, it would take obviously years to build 3 camps, assay lab, a mill, and drill up 3 million ounces. And you're not paying anything in terms of time because they already have it. So when let's do a theoretical example here. The total sunk cost is like $222 million because it would cost 132 million to drill it up. It would cost 100 million more to actually, build a mill and get the permits and yada, yada, yada. So you're buying something in black and white with a 70% discount. That's like, you could see it as somebody drives up a car to your door. He says, this was just built today, this car. It cost $100,000. To build another one of these cars, $100,000 you would have to pay today. You can buy it for $30,000. Anybody would buy that car if they had, money, obviously. It's like it's an immediate, price to value arbitrage. You're buying something that costs 100 million for 30 million, or 100,000 for 30,000. And you can look at it at this as well. It's like multiples of EV. The sunk costs. Actually, this was supposed to be 232. So 232 divided by the enterprise value is 66.5 million. That's 3.9. So what you're buying everything for now, which is 66.5 million, it would cost 3.9 times that amount to redo it today, plus all the years to do it. It is just unbelievable how cheap this sector is. Nobody in their right mind would go out and spend 232 million to end up being valued at 66.5 million. That is the antithesis of value creation. And we know how hard it is to actually get a permit to build anything and to find 3 million ounces, yada, yada, yada. It's just insane. We can buy banked success at a 70% discount to sunk cost without taking any risk or having to wait one day to get the success. It is mind-blowing stuff we're seeing out there. And I just looked it up. They had news releases earlier, but they were archived and you had to go through SEDI, and I wasn't prepared to do that. Just since 2020, Bonterra has raised 64.2 million. Their current market cap is 74.5 million. I mean, probably they spend, you can't guarantee that everything was, every dollar spent created value, but it's like goes to show. I mean, just in the last 2 years, they spent 64.2 million, and you can buy the whole shebang today for 66.5 million when the market cap is 74.5. It is just surreal how cheap it is. Asgard Resources, market cap, last I checked, 165 million, cash 60 million, debt 41. And notes like, 8 million in cash. I mean, they're not, they're not going bankrupt anytime soon, really, depending on how much they do, obviously. But I don't think that's a problem. I mean, Asgard is certainly not going bankrupt anytime soon, even though, they have a high burn rate because they're actually building a mine. They have around 3 million ounces, so like Bonterra, let's assume it costs 132. It would cost, if you started today and we're gonna drill up Asgard Resources bank resource, it would cost you would need to raise 132 million. And then they have infrastructure, halfway built mill, they have ramps, earthworks, portal, they're doing underground development. Let's say that it is at least worth 200 million. That is how much it would cost you. That is how much money you would need to raise today to get to the stage where Asgard is today, on top of drilling for 132 million. And then, of course, they have a bunch of permits, etc., which is no guarantee that you will ever get them. And let's say that cost at least 10 million and would take you many years to do that. And how do you value time? That's harder, and the risk, because like I said in the last rant, you can't guarantee that you will even get the permits. You might spend a lot of money, but still not get the permits. So it's worth more than what it actually costs to get the permits, because there's a risk you won't even get the permits after having spent the money. But anyway, so total sunk cost, let's say that's 342 million. You would need to raise 342 million and have to wait, let's say, 6 years at least to reach the point where Asgard Resources is today. And today you can buy it all for 144.2 million without waiting or taking any risk, because they already have 3 million ounces. They already have a lot of the infrastructure. They already have a bunch of the permits. So this is not even risk adjusted. This is banked. These are banked facts. You're 100% buying what you're seeing in the company right now. That is the 100% success you're buying. You could have spent 342 million and still you wouldn't have no guarantee to even reach this stage. So, and I just looked through the financings just to again make a point, I guess, because again, today you're buying 3 million ounces, halfway built mill, all the infrastructure, all the roads, permits, etc., for $144.2 million. this is what they have needed to raise in terms of money just since 2015 to get to where they are. And I don't think this even covers everything that has been, all the sunk cost in this project, because this used to be a mine as well. In 2015, they raised 7.5. 2016, 1.29, 20, 9 million. 2017, they got 8.45 million via warrants. 2018, a slow year, 6.5 million, and then 3 million. Starting to ramp up in 2019, they raised 10 million, then 15.9 million. 2020, 10.3 million. 25 million, 2021, 61 million, 20.6 million, 3.8 million, 6.4 million, and you end up with a total money raising of 266 million. And today you're buying everything for 144 million. Imagine how nobody would ever try to do what Ascot did if the valuation today is fair. They would have spent 342 million, raised 266 million, just to end up with something that Mr. Market now says is worth 144 million. So you're stealing, let's say, 10 years of work, 342 million in expenses, and you're only paying for those 10 years and this amount of money plowed into it. You're buying everything for 144.2 million, and you don't need to wait a day. So not only do you get the 10 years of work for free, you get like $200 million for free as well. It's just unbelievable. Simply unbelievable. Again, nobody would be dumb enough to try and find gold if any of these valuations made sense. Because in that case, you would need to raise 342 million and end up with something that the market right now says is only worth 144 million. And it would cost, again, 342 million to redo it. It's just incredible how much you can steal. I mean, it really feels unfair. I mean, imagine when they started off, it's like, yeah, all these raises, all this dilution, they needed to dilute again and again and again in order to raise, let's say, 342 million, or at least they raised 266 million. And at the end of the day, today, we can come in here as new investors and buy the whole shebang, skip all this progress time, and buy everything that's been done for 144 million. That is just it is just incredible how much we can steal, how much we get for our money right now. I mean, one could say that, again, most of the, let's say, the drilling costs alone, 132, it's like we're getting a free mill, permits, ramps, earthworks, portals for free, literally for free. Someone come up to you in the street, say, hey, do you want a mill worth or a halfway built mill worth 200 million? Sure, why not? It costs 200 million. If I can get it for free, I'm all for it. Jesus, somebody just gave me something worth 200 million. I didn't pay a cent for it. I mean, you can't beat that kind of purchasing power. Going into a car dealership like here, you get 200 million worth of cars for free. Are you going to say no to that? I don't think so. It's like no resources. Last I checked before today, market cap 102, cash 70, equities 19 million, enterprise value around 13.2, 500,000 ounces. Let's just say for the Beatons Creek sulfides. So that would cost like 22 million, let's say, to drill up. The sunk cost at the Golden Eagle plant, and all the facilities, etc. there, let's say at least 250 million. I think that's at least, because again, inflation is up, so sunk costs have gone up. So it would probably cost more than 250 million if Novo started from scratch. I mean, just to show how absurd this is, let's say you have Novo Resources without the mill. So you have 70 million in cash. You have a market cap of only 102. You have equities for 19. Let's say that's a shell company pretty much. Okay, and you want to get to what Novo has today. So that $102 million market cap, you would need to raise the equivalent of 2.5 times that just to get to be able to afford to build a mill. Then you would need to also spend 22 million to drill up 500,000 ounces. And of course the permits, etc., to even build the mill in the first place, let's say a few years and $10 million. I mean, if you reverse engineer all this success that these companies already have, it just becomes so completely absurd. Because if you try to redo the steps that it has taken, let's say you could buy Novo as a shell company with only this, or you could buy Novo with all of this. To get from a shell company, you would need to raise 282 million. And you have 70 million in cash. You would be seriously diluted if you're going to raise 282 million with a 102 million market cap. Same for Ascot. If you're going to raise 342 million to redo these steps, and the market cap starting at 165 million, you're going to be diluted quite a bit. Bonterra. Let's say you start out with today's market cap and you'll need to fund value creational stuff for 222 million. And you start off with a 74.5 million market cap. You won't be able to do that today without some extreme dilution. Again, they just raised 64.2 million in the last 2 years. It is absolutely absurd how much stuff you get for absolutely free right now. And you should really think of that. It's like, how much am I literally stealing? Because when you own a share in a company, you own a share in all those assets. Every asset they have, everything of value they have, you are a partial owner of it. So you're paying, in Bonterra's case, you're paying 74.5 million when you're buying shares. I mean, your small stake in it. You get 8 million in cash and you get sunk costs that are worth 222 million. In Ascot, you're buying, you're paying 165 million. You get 60 million cash. That's 41 million. You get 3 million ounces for enterprise value 144.2. You're paying 144.2 million for 3 million ounces and a halfway built mill, etc. that costs 200 million, and you get free permits to boot. I mean, this barely covers the drill costs. Again, it's like, if that doesn't get you to get greedy, I don't know what will. And that's the whole point, it's like being a value investor. If Ascot or Bonterra or Novo becomes even cheaper, again, it's like you're just stealing an incredible amount of value. Your purchasing power is going through the roof. If you're already getting a mill for free, maybe you get a 30% discount on all the drilling that's already been done. I mean, you're basically, right now, we are stealing huge amounts of value from everyone that has owned these companies or financed them, etc. Because somebody, including us sometimes, paid up to raise all this money? 222, 342. And we can come in today and just buy it for like peanuts. I hope that my point comes across. It's like I'm looking more and more at stuff like this, because there are, imagine you have a 3 million ounce deposit, they have no mill, it's worth $50 million, let's say, the company, and you find a company that also has 3 million ounces, but it's worth, it's trading, it's priced at 60 million, so 10 million more, but they have a mill that's worth 100 million. At surface, you might say, well, I'm getting, I'm paying a bit more for the gold in this one that costs 60 million for 3 million ounces than 50 million for 3 million ounces. But you can't forget that it probably cost them 100 million, which is double the 50 market cap company's market cap, to even build a mill. And that would take years. So the risk reward, the opportunity, on surface, if you just look at how much gold they have, but when you factor in how much dilution and money needs to be raised to get to where the company with a mill is, the 60 million market cap company would be an absolute no-brainer. And I haven't looked, you could consider like I-80 Gold, for example. I think they have like one autoclave or what it's called. They have a bunch of like infrastructure already. So I-80 is probably also one of the absolutely, that's one junior with a huge amount of sunk costs. It would probably cost them at least 400 million to rebuild what they have today. I think they have a market cap of 550. And to drill up the amount of ounces they have, I think they have like 20 million ounces of gold, 130 million ounces of silver. Probably cost at least 200 million to drill that up. Way more actually if you consider that it's $44 per ounce. Maybe it would cost at least a billion to get where I-80 is at today. And then you would also need to be lucky to find it in the first place, get all the permits to build everything, get all the permits to even drill, yada yada yada. It's just absurd. It's just absurd and unfair how much purchasing power we have right now. Because because the marginal investor is scared shitless. Mr. Market is literally giving away stuff for free right now. All we have to do is say thank you and buy and hope if we have more money coming in that somebody will be dumb enough to sell these assets even lower. Our purchasing power is going through the roof. In the future when these get expensive again, you're probably, pay 300% over sunk costs or something. Because that's how the market is supposed to work. It's supposed to reflect the time, effort, and chance of success to even reach the stages that all these companies are already at. And we're paying a discount to all of that. It's not supposed to be this easy. Anyway, let's look at some juniors. We have Goliath out with, you know what they say about good deposits or good systems. The surprises keep coming to the upside. This is just getting huge, and apparently they found visible gold in multiple holes as well. This is a new one, so I don't know what this means. I'm not banking on super high grades just because of that, but pyrrhotite, very high here. Sphalerite, 15%, galena 10%. So this hole is probably gonna run at least. And yeah, you can see it's like these holes are very high pyrrhotite. I think that's kind of a proxy for gold, if I remember correctly. Sphalerite, that's what is that? That's zinc, I think, and galena is lead, or it's the other way around. I'm not 100% sure. But these holes are probably gonna run given the concentrations of sphalerite, galena, and pyrrhotite, and obviously visible gold. Same goes for this one. Here you can see some with lower, like pyrrhotite up at least 15, but galena 3% and 5% versus like 15 and 10. Yeah, keep hitting here. Also pretty pyrrhotite, very high here. Yeah, I mean, this is just a massive system, and again, and listen to this. Goliath crew, together with an independent geologist, found compelling evidence that the steeply dipping high-grade gold-bearing, can zoom in, gold-bearing quartz breccia gold swarm zone is directly related to shorebed and might be part of the same mineralizing system, including similar mineralization, textures, and structures. It's located 4 kilometers along strike to the north of the shorebed zone. And grab samples up to 54.3 grams per ton AU, and channel samples up to 29.7 and 14.3 grams per ton AG over 0.55 meters. This is 4 kilometers north of the shorebed zone. I have no idea how big Goliath is gonna. Isn't there a map? Yeah, here. Here. So here you can see gold swarm discovery 4 kilometers along strike to the north. I have no idea how that hangs together, but it's still on Goliath's ground, obviously. It's like wide open and in every direction. And this alone could be like multi-million ounces. And it's still open, and they hit the new gold. I mean, you probably saw the site visit video from Goliath, where their geologist is at a computer and goes through like, yeah, it's open here, here, here. It can continue down, onto this side. I mean, that's they already have 5 rigs drilling as fast as they can. But like, yeah, fast forward to field season, and you know, how big is this gonna get? I have no idea. Could this be worth billions? I mean, the metallurgy looks great. Continuity is absurd. Scale just keeps on growing, kind of like Eloro. This could very well be worth a few $1 billion in a few years, I think. It has a market cap of 100 right now. There are no guarantees, obviously. But like, if you hit 50% of blue sky here, that's a multi-bagger for sure, I think. So this is one of my big hodl stories. For, in my opinion, obvious reasons. And like I've said before, I'm not too keen on... I mean, given how cheap success is, you can buy stuff that has already happened for way less than it would cost to even get to that stage, and you're not even taking any risk on it. So banked success is just absurdly cheap right now. But with that said, tier 1 deposits, or tier 2 at least, they don't grow on trees. So there's a few that I pretty much refuse to at least sell out of, or totally sell out of, because they're so unique. I mean, a tier 2 to tier 1 deposit, they can become 10 baggers plus without much help actually from the price of gold, because most of their value creation is internal. It's not based on what gold is doing, it's based on the company's results. Unlike some of the mature developers or late stage explorers, you already know what they have and they might not be able to find too much more, but you're buying what they have on the cheap. In these kind of situations, you're paying for a future that has yet to happen. But if the future is like, potentially 10 to 20 times, blue sky is 10 to 20 times valuable as the current price, then I think those are still good bets. But I wouldn't, the ones I, let's say, hate the most right now, even though they're cheap as well, is like early stage explorers. Because you're not getting a discount on anything, and sure, some of them might become 20-30 baggers, very few of them, if they actually find something. But that's still potential. That might be a 5% chance or less. I know for a fact I'm stealing value in these ones. District hit pretty... no, this isn't a... Or was it? Oh, okay, this was the interview. I think District had... Didn't I put that up? What the hell? Okay, but I know District Metals, they hit some high zinc numbers from Gruvberget in Sweden. That's nice, and I don't know if you're aware of it, but the District Metals or Sweden, the right bloc just won the election, and they're quite pro mining. So I hopefully Sweden will get our acts together and will actually, become a really good mining jurisdiction again, because there's obviously a lot of potential. Line Metals did a bought deal, public offering of units. Unfortunately, like 77 cents, I think, a warrant at around $1. That was below the current market price. A lot of people are upset. My guess, based on the share price action lately, I think some of the people, let's say, that have been in contact with Line 1, for example, I don't know the specifics of how this financing came to be. Obviously, they feel that they need to raise some money to keep up the pace of development, because Line 1 is actually on the way of building to become a mine. So they have quite a high burn rate. So that's something that the market obviously knows. And who knows, Lion 1 might have thought that, if we wait even longer, maybe the world is going to be much worse in just 1 month or 2 months. So maybe they felt like, we better raise. We think, we have people contacting us about, being interested in getting in. And obviously the big money prefers to get in a private placement, so they don't need to buy in the market. And if the ones who are going to buy into this financing, if they talked around, they probably started selling shares. They forced the price lower because they know they're going to get into a placement with warrants. So why it benefits them immensely to drive down the price, because A, they will get a position anyway, and B, if they drive down the price and get warrants, they're forcing something down so it becomes cheaper than it should be. So they're starting off at a lower level with their position. Maybe they started selling at 90 cents and or $1, whatever. Made the stock go down, and now they can rebuy everything they sold around 90 cents down to 80 cents for $77 cents, and they get half warrants at $1. You could obviously make big money, and it's almost risk-free pretty much. Sadly, and there's no buying power in this market to hold the price up. So unfortunately, I think, if I had to guess, I think that's something that probably happened. And if you're seeing this and you're in Lion 1's position, it's like, okay, there's no buying power in this market, and they're going to just keep on selling and hammering the stock because they know we're going to take in money, etc. And in this environment, they know they got us, bent over a barrel pretty much. So who knows? Maybe Lion 1 felt like, if we let this selling go on for another month, we would need to be raising at 60 cents or something. So I think they felt like, okay, we have to bite the bullet. A, we need the money. Two, the ones who know we need money or are planning to raise, they're going to, slam the shares more the longer this takes. Goliath already went through that. Magna Mining, a favorite of mine. They got another ex-FNX guy on board. They got is pleased to note it has received a conditional approval from the TSX Venture Exchange for previously announced proposed acquisition of 100% of Lonmin Canada Inc., which has the Denison project. They also new management. Mr. King is a registered professional geologist with more than 25 years, blah, blah, blah. Prior to work with TMAC Resources before a company was sold to Agnico Eagle. That's nice. Prior to working with TMAC, he was a senior manager, geoscience and mineral resources for KGHM International. That's a very big company. Nice. Mr. King gained extensive experience in the Sudbury Basin after joining FNX Mining Company in 2002. and holding positions of increasing responsibility with FNX and Quadra FNX until the company was sold to KGHM in 2012. FNX and Quadra FNX, that was the Nickel Junior, or started off as a Nickel Junior in Sudbury, and that's where a lot of the guys from Magna Mining are coming from. That was a huge success. So they're bringing the band back together even more so now. Eloro, longest hole yet, 150.5 grams per ton AG equivalent over 441 whooping meters in a high-grade feeder system at Santa Barbara. The most interesting things, I think, were... Well, they're pushing, as a result, estimated completion date for the maiden resource. So this Iska just keeps growing. So they were right. They're tracking the high-grade feeder zone. They hit, and listen to this. No, where was that? Well, here's like the 3D inverse magnetic model, which correlates very strongly with the conductive zone, suggests that a high-grade feeder zone may extend across the entire caldera for as much as a further 1 kilometer along strike, for a total potential strike length of at least 2 kilometers. So the geophysics suggests that this might double in size the feeder zone along strike. And also new downhole geophysics data have significantly extended the strike length of the high-grade feeder zone at blah, 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 blah. Yeah, okay, that's the feeder zone as well. This is just, I mean, like with Goliath, the surprises come to the upside. I thought we had I think there is a... this is the potential porphyry. I'm not sure where you can... This is obviously like the potential strike length. So this is like the high-grade shell. So I'm assuming they continue like this, maybe to that way as well. But this is a monster. It might double in size. It might more than double in size. It might triple or quadruple in size. I don't know. But this is going to grow. That is for sure. This is just going to become bigger and bigger, and it's already huge. Obvious alpha. And when the resource is out, I think they said that it would be in early 2023, Q1 of next year. I mean, that's not too long to wait. I mean, when that resource comes out, I think it will be a whopper of a resource, probably around, I don't know, 1 billion ounces AG equivalent at least. I mean, you can imagine the beta after that, and then it can, you know, potentially double in size from that, or triple or quadruple. This is probably one of the biggest, gonna be one of the biggest discoveries in a long time, I think. Absolutely cheap. So I think it's mostly because it's in Bolivia. Snowline, or dear Snowline, doubles Yukon Mineral Holdings with acquisition of nearby project portfolio and provides exploration update. So they're adding even more. They're doubling down in this district. And apparently I think they mentioned that I thought they mentioned... Well, this somewhere they say something. Oh, well, here. Purchase of 10 property portfolio from Strike Point Gold will add 7 plus reduced intrusion related gold targets to Snowline's exploration pipeline. 7 additional intrusion targets. And the valley is 1 intrusion. And this is the same district basically. And they already have like, I don't know, 6 or 7 intrusion targets already, and a bunch of episonal and Carlin style and base metal style. They even added to the Ursa, which is like this massive base metal target. I mean, this exploration arm, talking about, you know, buying stuff or getting a lot of real estate and assets, Snowline must have one of the absolutely largest project portfolios in the entire space by now. 10 to 20 juniors could be working on all this land. And this is one company, so it's not like you're just buying Valley, which everybody focuses on, but we can't forget that the value of this land package probably, who knows, I mean, 100 million? I mean, Jupiter is a discovery already. Gracie, I mean, we haven't hit the bullseye at Gracie yet. They haven't found where the actual intrusion is, but they're hitting the visible gold in quartz, so we know it's there. It's just they haven't really located yet. So that's probably going to be a discovery, if not this season, next season. So I mean, if we were in a hot market environment now, it would cost a lot of money, I think, to gather all these land packages together. If this was 2016 or something, you would have to pay up a lot to get all these land packages. In that scenario, if they just sold, chopped up all these projects and sold, I think they would easily get like 100 million or something for it. My guess might be less than that because it's early stage. Still, I mean, it's certainly nothing to sneeze at. Just how much more you get than Valley. Ongoing drilling continues to expand scale of high-density vein arrays on Rogue Project's Valley Zone, adding to the breadth, length, and depth of zone known to host intense quartz vein mineralization. I mean, look at this. These star series VG, and these are vein densities. This was hole 7 here, which so far we only got partial assays from, and that's the hole with, what was it, like 283 meters of 2.3 grams per ton. And that's still open, including 146 meters of 3.24 grams per ton. That blows away like all the drill. I mean, that's way above the highlighted drill results from Fort Knox and Eagle. So this is appears to be abnormally large and abnormally high grade. And that's what I would consider to be a tier 1 discovery target. Interesting part here is like this looks, I mean, super juicy. Hole 10, no assays yet. This is hole 29. This is around 600 meters of this is supposed to 0 to 5. I don't think this. I think. One second here. Yeah, this is supposed to be 5 to 10. This is supposed to be 5 to 10. Anyway, medium to very high vein density for like 600 meters, and I think they're still drilling this. So if this continues, I don't know if they've actually drilled it, because they show that in this picture they have the intrusion goes all the way out here. So maybe this is actually totally in the intrusion, and we could expect hits this way, because it appears that they again mapped it like it. There is a bulge in the intrusion. Maybe they haven't just surveyed it yet. Maybe they haven't went through and counted all the vein densities. But imagine that this hole, and this will be one of the latest holes to come out because it's one of the last holes to be drilled. This looks like this could be a hole that runs like 600 meters of 1 to 2 grams per ton. This might extend all the way down mineralization. That would confirm, I don't know what the exact vertical length here is, but I'm assuming this is like 600-700 meters at least. Maybe they actually say that. Okay, they haven't. You should read through this whole news release anyway. But imagine it's like this hole here. What's that like? I don't know, 500 meter, potentially 1 to 2 gram, maybe higher. Who knows? This might be. I mean, imagine that this hole comes out with like 800 meters of 0.5 grams per ton. Jesus Christ. And maybe this area here is like 300 meters of 2.5 6.3 grams per ton. It's just incredible what they're finding here. This is easily going to be 10 million ounce plus, I think. I've seen some people do calculations. I mean, Quinton has a crude calculation of like 33 million ounces or something. That would put it as one of the largest deposits in Canada that's ever been found. And that's one of their targets. And they have like, I don't know, now up to probably 15 intrusion targets more. And also Gracie, of course. And you have Jupiter here, etc., etc. So it's like, yes, we all the focus is on value right now, and I think that is underappreciated to begin with, because I already see people say, well, this is kind of expensive. I mean, if this is like probably 10 million plus up to 30 million ounces of like high margin gold, probably because these RGS systems typically have really good metallurgy. I mean, the Fort Knox cutoff grade is 0.1 grams per ton. Victoria Gold's Eagle deposit is making bank at 0.65 grams per ton. So if you have a good margin on 0.65 grams per ton, you can imagine if you double or triple that grade, that is pure profit in that case. Pure profit. So I mean, 2 gram per stuff of this stuff, 2 gram stuff here of a system like this might have, I don't know, several 100% higher margins than Victoria Gold, and that's a good mine. So I think I don't think this is overvalued. I think people don't understand just how valuable this could be. If this is 10 to 30 million of high margin ounces, that's a tier 1 deposit. That could be worth, I mean, the permitting and all of that aside, just from an economic standpoint, that could easily be worth several billions of dollars. So I don't think it's expensive. Golden Tag out with some positive metallurgical test results from Fernandez zone. This is not getting much love. I mean, they're not, super high recoveries, but they're actually, kind of okay recoveries. I think 84% for zinc, 76 for AG, and 84 for lead. Now I'm not a expert on metallurgy or anything like that. But the fact that they are doing metallurgical tests, etc., I mean, that is, if nothing else, that signals that they are, kind of serious about it, because this is this is obviously important for economics, but, not so serious juniors. They would never do metallurgical testing really, because they don't want to potentially kill their project, because they just want to raise money and drill and all of that. So that's a good, in terms of signal value, that's good, and it appears that these are kind of good recovery numbers. And it's like, yeah, Golden Tag has been beaten up pretty much like everything else, down 87%. In here, I mean, it was completely different company, but it's like, just to show again cyclicality, down 98%, up 3,851%. And in the juniors, like I said, we're simply in the flush period. But after the flush, this is where you want it to go as low as possible, because obviously, I mean, the returns just go absolutely crazy. The lower these stocks go. The cheaper they get, the higher the future returns are. Longer rant than planned as usual. Consider me biased. I own a lot of these. I think I own all companies. Many are banner sponsors as well. Do your own due diligence. This is not investing advice. Don't invest money you cannot afford to lose or will need in the short term, because there's nothing that's saying that. I mean, from a valuation perspective, we should bottom today. But that's not how markets work. I mean, the juniors were cheap 6 months ago already. They're just getting absurdly cheap. and we might be able to steal even more value. It's like, you know, feel bad for the ones who financed everything, and we can just come in and buy everything after the fact for like pennies on the dollar. But hey, I mean, we're in this to make money, obviously. So if somebody wants to, you know, give away something that would cost 220 million to build today for 66.5 million, then bring it, bring everything you can. I mean, as long as I have money, it's like I want to steal value. I want to be able to buy 222 million dollars worth of stuff for 66.5 million all day, every day. Thanks for listening. Hit the thumbs up if you like this stuff. Bye.